Good morning and welcome back to the latest edition of the InvestTalk market analysis for the week ending May 26, 2023. Appreciate you all tuning in to this channel and our podcast InvestTalk. I am host Justin Klein, and today I'm going to title the video "The FAANGs plus Nvidia Bounce Back. Will it last?" And we're going to dig into all of this. And I thought this is a great chart that I found, and it's showing basically the FANG names plus Nvidia are up 44% this year after having a terrible year last year, right? They're bouncing back in a pretty big way, okay? And so you have the S&P up 10 total for the year, but the remaining 493 companies are only up 1%. And if you go to the small caps, they're definitely in negative territory. So if you want to, be having a decent year, you have to own the majority of these names, and especially Nvidia, which we'll dig into here in a minute. But I thought what was interesting is after this recent announcement on earnings and not just earnings, but prognostication of their business going forward, right? Their guidance, which was very, very bullish and caused the price of Nvidia to skyrocket. Here, I'll show you what this looks like. Look at Nvidia's chart, just reaching all-time highs, right? Having a terrible 2022 when it went from 300 and change, all the way down to below $100 per share, almost to $100 per share, right? And we bounced back all the way to 388. And remember, this boom was all about the gaming revolution and crypto and all of that, and obviously that didn't really come to fruition in their business. So that was kind of the hype back then, and now we have new hype around AI. And what was interesting is that right after the bell yesterday, they decided to issue an updated shelf registration for $10 billion of stock sales, which is quite interesting. Kind of reminds me of a pump and dump scheme, something a small cap would do, but this is now a mega cap, and people are chasing it. So pretty interesting to see, trading at 35 times sales. If you follow the show throughout time, you know that anything over 20 times sales is egregious. Anything over 10 times sales, it's hard to make money longer term. But you have the AI hype right now, and that's kind of where we're at. So I wanted to give that perspective on the broad market. Now let's dig into the economic news today. This week, pending home sales came in flat month over month, but new home sales, that was up 4% month over month. And you continue to see new homes gain market share. Typically, in a normal market, new home sales are around 12 to 15% of total homes sold. Now they're over 30% because people are rate locked and there's not a lot of inventory on the existing home market, and most of the new supply is coming from the new home market. And you can see this is a longer term chart, but you see a surge during the pandemic of new homes being built. That obviously retrenched in 2022, and you're starting to get a rebound so far this year, and that is because, once again, those new home builders can offer incentives, get interest rates down, get their right buy points for their buyers, and get their mortgage down to something that's reasonable. And their margins are still relatively healthy. Now, real GDP growth quarter over quarter, that came up 1.3%, still kind of near stall speed. If you look at GNP, gross national income, or sorry, GNI, gross national income, that was actually negative in the first quarter. So really a stall speed for the overall economy. Kansas City manufacturing production, -2 in the month of May, and continuous claims. This is where the strength lies. You see this really peaking in April and coming back down. And I always watch this because it's about how many people are not how many people are losing jobs, but how many people are staying on the unemployment rolls, and that's kind of come down. We'll see how that trend's going forward, but the jobs market seems to be okay for right now. Total vehicle sales, that came in at 16.5 million. You see that reaccelerating from the low, really in September, the fall of 2021, when there was chip shortage and supply shortage. So there weren't a lot of vehicles to sell, and you're seeing something similar with the new home market, right? The new car market is improving mainly because you're seeing inventory tick back up and prices come down, and that's making it more enticing to go buy a new car. The inflation numbers came in. That was a bit of a disappointment, reaccelerated to 4.8%. The core PCE accelerated a month over month, 0.4%. Core PC year over year, that was roughly flat, so that wasn't too bad. I think you're going to see this really accelerate in the month of June, but we still have April to print, and we have the Fed announcement coming later or mid June. So that'll be interesting to see how they react to this inflation data. Personal income, that was up 0.36%, and personal spending up 0.84%. So the consumer continues to hang in there with incomes and spending on the rise. The June odds of a rate hike are now at 64%. So, this is one reason why you see the dollar kind of resurging, which we'll dig in here in a minute. I still don't think that they're going to raise, but they continue to, I think, make dumb decisions and not really not really take into account the long and variable lags of monetary policy, right? So we'll see what they do in June and how that evolves, especially with the debt ceiling overhang. It looks like they're going to come to some type of a deal, but we'll see how that evolves next week. The dollar did come into some major resistance here from the March highs and had a little bit of reversal on the day. We'll see if we get some fall through on Tuesday. Remember, Monday is Memorial Day holiday. So just a heads up there. Now let's check in on the bond market. The MOVE index with that is moving back above 140 up to 145, up above 150. That becomes a problem. So this is, I think, a lot to do with the stronger dollar, with the odds of a Fed rate hike. I think if this starts getting above 150, you're definitely going to see the Fed start to jawbone the fact that they'll probably pause. Okay, next month. Gold, that pulled back on the week, but into just support right at the 100-day moving average. Nothing wrong on that front. Just a standard pullback. It was overbought, and we had a bit of a pullback as of late. Let's look at the credit markets, so short-term junk bonds to short-term treasuries, and that had a resurgence up yesterday. So, decent week, kind of a pause week, really, but overall up, meaning that the market isn't pricing in some sort of huge default cycle approaching, and obviously that would be a broad hit on equities. Let's see what else. You have the VIX. Let's look at the VIX. The VIX did get a surge higher and a reversal lower. And interesting, a lower high, right? A lower high. We didn't start making a higher high. So we have a higher low, a lower high. Still, broadly, this is bullish for risk assets, keeping the VIX below 20. Let's look at commercial mortgage-backed securities. I always find this interesting because that's a part of the market that will likely continue to struggle with more defaults with office and things like that. You saw that narrative really pick up in March, but we've had a rebound so far, and we'll see where that goes, but no major breakdown on that front. Let's look at gold miners. Those struggled over the past couple of weeks, but still remains in this uptrend and approaching some pretty good support. So something I'm watching. XLE, we continue to see tight supply dynamics. I think energy will move higher. A lot of this is very negative paper trading, bets by algorithms based on a slower economy, but the supply dynamics remain tight, and we're still seeing demand growth, although not amazing demand growth, but demand growth. So when you have demand growth still exceeding supply growth, you're likely to mean higher prices in time. So I still think we're in this pullback period, but we do think the back half of the year will be better for the energy space. Industrials, that one just kind of chopped around, still remains in a broad consolidation pattern. Nothing really to see there. Let's see what else. Let's look at the broad indices. So the NYSE that had a bounce back on Friday, but overall just a broad consolidation pattern. Nothing really sticks out either way on the daily. Just very, very neutral on the weekly. The MACD is still kind of hovering above the zero line. I'll be very interested to see if that can hold that level. That will be a strong indication of whether this is more of a broad consolidation period over the past 7, 8 months, or it is just a path to move lower. And obviously those, what is this, the fall lows? Yeah, or no, the March lows. That'll be a big indicator of whether we stay in an uptrend or a downtrend. So that's what I'm watching on the broad NYSE. If you look at the SPX, the S&P weekly, that's obviously remained relatively strong. And I've said this before, that this is a consolidation pattern for a breakout. We had a nice breakout on Friday, obviously driven by the tech side of the market, as I shown before. Small caps certainly are much weaker. Good day on Friday, and let's see, did we get what outperformed? Yeah, so large cap continues to outperform so far this year, but you're starting to see a MACD divergence here. So I think that'll be interesting to see if that can break the other way. And obviously, if small caps can gain steam, gain some strength along with the recent uptrend in the growth side of the market, the large caps, then that will certainly let a fire under equities. And there's a lot of people underweight, right? The sentiment still remains pretty negative, and people are underweight equities overall, which is typically bullish if you get some sort of a catalyst, like maybe a Fed pause or a true pivot. We shall see. The bank index, that one is starting to show some strength, right? So this would definitely help the small caps. A lot of the small caps are a lot of banks are in the small cap index, and so if that can gain some strength, that will certainly be a positive for markets. And that's starting to firm up here after making that divergent low. You see that this is a good idea, right? You had a low here. This is a what do you call a bottoming candle with high volume on a reversal and follow through to the upside, and we really haven't broken lower. We've continued to break higher, and the MACD continues to break higher. So I think the banking index looks to be on the mend overall. And the 10-year has moved higher to 3.8. I do think that is near the high end of the range for now. I think we're still in a broad trading range that's more of a pullback in rates due to inflation moderating due to Fed rate hike expectations moderating over time. I think that's it. Still remain very neutral on the broad index, neutral to positive, shall we say, especially after this week. And will there be a rollover later in the year? I think that's certainly possible. But remember, it's very hard to see a big drop in equities when there's so much money on the sidelines, when people are so bearish overall. So just keep that in mind. And I don't think that this trend of those FAANG names driving markets higher will stay in place. It's very difficult for just a few names to keep the market afloat. You're going to need some participation from the rest of the market, and I think you'll get that later in the year. And with interest rates still something, right, no longer at zero rates, you are likely to see a rollover in those growthier names compared to the value side of the market once this cycle kind of commences. So I think this is more of a short-term counter-trend rally when people got too bearish on tech in the end of last year. Now you're starting to see the other side where people are getting too bullish on tech. So that's where we're at. I appreciate you all tuning in to this channel as well as our podcast InvestTalk. I hope you have a wonderful holiday weekend, and a reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell a security or to participate in an investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a good weekend.